What's up, everybody? What's going on? Hopefully, everybody's having a good trading time this week and coming into the next week. Today is going to be a how to manage your trade when you entered. So, as you probably know from the previous video, majority of my trades I look for are no demand and no supply candles to enter the trade. That's the last confirmation. But as far as when we are in a trade, how do we manage it? Do we scale in? Because you can scale into a trade. You don't think that, you want to do what, you know, strong traders are doing, smart money institutions are doing. You don't just want to, say that, for example, sell here and my target is here. You also want to scale in. You can scale into a trade, move your stops as price moves, and that's what we'll be talking about. And at the same time managing that trade. So let's see, for example, on the 1 hour first, let's look at what it is. For example, let's say you're in the trade, you were looking up for a short in this area because of this supply zone. We came here, and basically this is what we had. We looked at this and we see, for example, close enough to touch, didn't touch, it doesn't have to touch. But the thing is, this reaction of a strong bullish candle, a exhaustion candle basically you can call it, and you had a kick in volume. So that's a pretty amount of volume right there compared to these. The reaction is the key. I always talk about this in my videos. Reaction is key. Reaction was bearish. Now let's see if we can get a no demand. So we got the no demand. We entered the trade. I'm not going to speak too much in details about it, but we entered the trade as confirmation came to right here. Confirmation, stop loss of here, mental stop loss, of course. And then how do we manage this trade? So for example, we're in an uptrend. So let's say this is our highest level besides this coming down. So how do we manage this trade? Because remember, this is day trading. We are not swing trading. Sometimes you will be able to swing trade on a no demand, no supply. Majority of the time they are day trades. So how do we manage it? We look. We see the candles. We watch the 5-minute. We watch the 15-minute candles. Majority of the time you don't have to be in front of your computer 24/7. You don't have to be in front of your computer every minute to be watching the candles. Of course, it's better, but you don't have to. You can manage it by looking at your phone every 10-15 minutes, seeing what each candle on the 5-minute has done. So for example, let's break it down here. We entered the trade here, stop loss over here, and this is where we're at. So how do we manage this? We can see we had a reaction on the next candle down, which is good, and then we had two bull candles, but the two bull candles could not close above the demand. So we're still a valid trade. We still are clear as far as the short goes. So we stay. Now, this is where key comes in. I'd recommend this to a little bit more experienced traders, but I mean, you gotta take risks somewhere. So take risks properly and manage them properly, and it should be fine. So this is what I'm talking about. You get a break below this. There is no close though. The close is right here. You can enter for another short right here. You move your stop now to where? You move your stop now to your break even from your previous entry. And we come back down. We come back up and we test. So now we're in here and we're in here. Two trades. But we are no longer in a loss. We come, we have a clear indication as far as these two candles go. This is still not a bullish up. because of the fact that it did not close above this candle. We always look for the close. Most important thing is, especially when you're starting off as a new trader, is the close. Close of the 5-minute candle, because this is what we mostly trade, is the 5-minute candle. You can trade the 15-minute candle, you can trade a 30-minute candle, but I see more details in the 5-minute candle. There's people that I know that trade the 1-minute candle. People who claim that it's just noise, but go to a bunch of different experts. You can check, for example, L. Brooks. I say in our modern time age is one of the best candlestick analysis, trader out there. He has about candlesticks. I can't explain how much details. It'll take probably a good few months to understand exactly in details about each candlestick the way he explains it. But it is very strong knowledge, and one of the most important things he says also is the close is key. The close of the candle is key. So we see comes down, and now we see this. So we see a big exhaustion candle followed by a smaller candle. This indicates, especially at this level, this indicates that shorts bears are reluctant to sell anymore at the close. So you can see it here, you can see it here, and you can see it here. So in this case, I'd move a mental stop loss all the way now down to this level. We want to secure profits. It's not a great profit, but as long as you are in profit. So we came up and we got a close above this, so we're out of the trade. Now we're watching, and here comes news and all this, this Friday non-farm. So it came in, news, reaction, all that good stuff. People love to listen to news, and the reaction was a nice push-up, but again, similar to this, this is a big exhaustion bullish candle. Again, bulls are reluctant to buy. Here, there was buying. But, in this case, this level that we drew out before, this supply zone, a reaction into it to the downside is starting to look like shorts are coming in. So, we get a no demand. We get a no demand on this candle right here. There is no confirmation here, no confirmation here, no confirmation here. We get another pushback up. Volume increases a little bit. And then we get this big bearish candle. This is not an exhaustion candle because of the fact that the next candle was pushed to close below this candle. So we could have entered the trade here at a more aggressively, or you could have entered it right here for a short because of the fact that you had a no demand. And now how do we manage this? So for example, this is how you would be able to manage this short. Stop loss above there, and now we look, we see we have a clear indication of a push down, push down. Now let's say you were targeting, when you enter this trade, you were targeting again back to this level for half your position to get out, or you were targeting back to this level right here, all of this right here in this area. So instead of targeting it in that way, just I'm not gonna get out of my trade, or I'm gonna move my stop loss to break even, I wouldn't recommend that. I would recommend managing the trade because things happen in between trades, in between supply and demand zones. Why not secure profits when you can? So for example, we came down, we had a big exhaustion candle come in, they came, the next candle was bullish, so now I would be wary. I would move my stop above here, mental stop of course. If candle closes above here, I get out. And then how do we look at the next candle? The next candle was bearish. I would still not enter the trade just because of that, just because of that candle right there. So now the problem is this candle is not showing bears are heavily selling. They did come in, but they're not heavily selling. They're selling up here. They started selling here, not the close. They're starting to sell here. They came here also again. They are not selling heavy. Now comes in the selling. The selling came in here, but the next candle's reaction was strong. So, because of that next candle's reaction is strong with volume, now what is our key to look at? We want to look at the next two candles to see where is a good area to move our stop. We move our stop to above this, closes above this wick, we exit the trade. As you did, you could have entered here, here, got out here. That is pretty good amount of pips with your original stop above here. So I would say that's a good trade for Friday. And that's a little bit, on a quick video of how to manage your trades when you are in a trade. And I'll be making more videos like this because the more examples that people see, the more it starts to click and subconsciously click into their mindset as to how to exit a trade, how to add to a trade. And that's pretty much it for this video. Hope you liked the video. Please subscribe, comment below, and I will leave you with a question if you have, as far as, do you enter a trade with the mindset of adding on to that trade? So would you add on to an existing trade that you're already in? Not if you're losing with the trade, if you're making money on the trade. And peace out.